G, let's now move on to consumer and conglomerates, companies that serve as key bellwethers for the Philippine economy. Few names are as closely watched by investors as this company. Our next company is arguably the most deeply embedded in the everyday lives of Filipinos through its malls, supermarkets, banks, and real estate developments. It is no surprise that many investors view it as the best proxy for both the Philippine economy and the local stock market. But with ongoing headwinds, from weaker consumer spending to global uncertainties and domestic political noise, SM Investments' share price has faced its share of challenges. Today, we find out, is it now the right time to invest in SM? Let's hear it from the company itself and find out what lies ahead. So, to present our speakers who will do SM's outlook, first, we have Mr. Erwin G. Pato. He is the Treasurer and Executive Vice President for Treasury, Finance, and Planning of SMIC. He is the Chairman of Family Cooperation Health Services Foundation and is also a Board Director of SMIC SG Holdings. Prior to joining SMIC in January 2020, he was formerly the head of Treasury for Temasek Holdings based in Singapore. He spent over 25 years of Treasury and finance leadership experience in various industries, spanning from investment banking, local and regional banks, global consumer finance companies, global industries companies, and government-owned global investment companies. Let us all welcome Mr. Erwin G. Pato. All right, our second speaker from SM is Mr. Jonathan Nang, the President of SM Retail. He joined SM Retail in August 2021 as Senior Vice President and Chief Financial Officer, and in January 2025, he was promoted to Executive Vice President before assuming his current role as President. As President, he oversees the commercial, finance, and support functions, which include information technology, human resources, MPD, logistics, workplace and administration, procurement, sustainability, and CSR. With over 2 decades of leadership experience in finance, accounting, and investor relations at Goodyear and Procter & Gamble. He brings with him a global perspective and a proven track record of excellence. His international career spans key assignments in the Philippines, Singapore, Japan, China, and the United States. Let's all welcome Mr. Jonathan Nang.
All right. Thank you, Sir Erwin, Sir Jonathan, for joining us today again.
Thank you.
I guess for the benefit of our audience as well, no. So because SMIC is obviously a big company, right? So as of the current year, no, so the net income mix, 50% of SMIC's earnings is from the banks. So that's BDO and China Bank. For property, 28%, it contributes 28%, so that's SM Prime, obviously. For retail, it's 15%, so that's the SM, the supermarkets, the SM store, department store, and the other retail brands as well, no? And 7% would be all the other portfolio investments. No? So my question is, being the biggest, conglomerate in the country, right, with obviously a diverse industry-leading, portfolio of companies. Could you just briefly share what's the overarching strategy of SM?
Okay, thank you. First of all, good morning, and thank you for having me here. So for SM, first of all, we're a consumption-driven company. All of our businesses focus in that sector. And why do we focus on that sector? As you know, we are a very young and developing country. And then if you look at our GDP, 70% of our GDP is consumption-driven. And then we have a young population. So today's growth is essentially driven by today's consumers. And since we are very young demographics, tomorrow's growth will also be driven by our consumers. So as such, if you're going to look at our footprint, our touch points, because in SM, we are part of the daily lives of millions of people, and where are their touch points? Our malls, the property that they buy, our banks. So in that sense, if you're going to look at where the strength of the economy is and where our businesses are, it's actually at the core of things. So in that sense, the question that we ask is that, would there be more growth in that area? And yes, there are so many opportunities, and our strategy is really simple. We expand our network, our coverage, and we create new markets. And we do this so that we can serve more of our customers. So just to give you perspective, let's say for retail, only 1 in 3 of Filipinos have access to modern retail formats. Okay, and only 1 in 3 in Filipinos have a bank account. And if you're gonna look at how our middle class is growing and how infrastructure also is improving, the demand for integrated property development will just continue to rise. So expanding in that core footprint of ours is really the strategy that we will have. Yeah.
So you mentioned about growth opportunities in the country. So what are the main growth drivers for SM?
Okay. Maybe in the slide, click first slide, maybe so that the people can see also. Where's the next slide? So maybe I can, the next slide. Okay, maybe here. So your question is the growth drivers, right? So as I mentioned a while ago, our economy is really, this is fine, consumption driven. But maybe I like the people to focus on the right side. So what can you notice here? Oftentimes, when we think about the Philippines, we think about NCR, where the center of gravity would be. But essentially, if you're gonna look at it, Luzon, Visayas, Mindanao, they are essentially growing as fast, if not faster, than the average of NCR. So what does this mean? It means that our country, in that sense, the growth is being more inclusive. So that allows consumption-focused companies like us to be able to expand out. So in that sense, most of our expansion is really outside NCR, outside Metro Manila, into Luzon, Visayas, and Mindanao. And maybe even on the retail side, right, Jonathan? Yeah, maybe you can talk about how the retail also is trying to expand its footprint across the Philippines.
And thanks, Erwin. And if you look at retail, a big portion of our strategy is focused on leveraging our strengths. Where the malls are, there would be our SM retail footprint. And with regards to expansion, the expansion that we have seen now and will be focusing on is serving the underserved consumers. And where are they? They're definitely outside of NCR. So in the past few years and looking at the next few quarters, expansion will really be in Luzon and Vismin, where I would say more than 60% of our new stores would be located in these areas.
Okay, so because you mentioned, so it's more outside of Metro Manila, and maybe me including maybe some of the other people in the audience, we might be biased because we're here in Metro Manila and we're seeing, di ba, parang we're wondering, may growth pa ba? Kasi, I mean, there's already a lot of malls, a lot of stores, right? But you're saying it's mostly 60% would be outside?
And I think just to make sure that, I guess, people may misunderstand and say that, oh, so SM Retail would only be focusing on outside of Metro Manila. I'll split it into two. When it comes to opening new stores, then the focus would be outside of Metro Manila because we have a lot of underserved consumers there. But what does it mean for Metro Manila? We continue to evolve our stores. We continue to offer different experiences. Where previously, if you go to a department store, you would think that it's just shelves and just put the items there and they're just going to sell by themselves, or consumers will just buy it off the shelf. What we're doing now is we're also renovating and refreshing our new stores, introducing more experiential in nature. I think you've seen in some of our department stores, we've already put in coffee shops. So while the moms and the kids are shopping, the dads can then sit down and take a drink for coffee. So it's becoming, we're evolving and seeing what are the consumer preferences. And that's what we're doing.
Yeah.
So in terms of, you may see that we're not expanding in terms of new stores, but we are evolving and changing how consumers shop in our stores.
Can I add just what Jonathan said? Just to be clear, Metro Manila is very important to us. Yeah, so in the times of our growth, that was really the centerpiece. If you're going to look at the malls, the retail, and the branches, when we all started, it was really in Manila because that's where the growth is. I guess the point I'm trying to make is that that growth is growing outside Manila also.
I want to focus on SM Retail in particular now, because obviously we also know there's other listed companies that are retail-oriented. But for some reason, if we go to SM Retail brands, there's always like much more people, much successful, much more successful than maybe the other peers. What would you say is like what are you doing differently, I guess? How are you able to be the market leader in the SM Retail side?
I think the first one is the portfolio of brands that we offer. I think our slogan of "We got it all for you" is really embedded in our DNA, where we cater to all socioeconomic classes. We cater to all economic classes. So we really got it all. So we cover from our value consumers down to our high-end consumers. And you could see it from our broad offering of different brands inside SM Retail. At the same time, the other piece that we also focused on is customer service. We pride on that. Aside from the fact that we're offering a broad portfolio of brands in our company, we also make sure that customer service is outstanding. And we continue to evolve. We continue to offer services that are not available in other retailers. You might have heard of personal shoppers in our SM store. Where not only can you call and place orders or look for items that you may need, you can also ask them to help accompany you, like having a personal concierge or personal butler while you're shopping inside our stores. The other piece that we're looking at is we continue also to evolve the concepts inside our stores. We continue to invest in making them look fresher and offering different services inside our retail stores.
Yeah. Since we're in the retail space already, I was just curious because one of the questions that we get from, I guess, investors is, the impact of digital. Say, how is SM responding to that and fending off competition from, digital platforms?
I call them that it is inevitable. Digital is here to stay. So the focus is really on omni-channel. So we will coexist with them. The advantage that we have in SM Retail is we have a large physical footprint. So the onus now is on SM Retail is how do we leverage our physical footprint with digital, and that's where we're now investing on technology to make sure that we're able to, if a person or a consumer places orders online, they could pick it up in our store, or at the same time, we can also deliver it to the residences. We don't necessarily have to maintain a central warehouse because we could also use our physical footprint as the fulfillment centers for our shoppers. So that also offers not only the convenience, but also a quick response time in terms of deliveries.
And I guess also the touch and feel because...
That's right. And
yeah.
I think time and again, people would say that with digital, that's going to be the death toll of physical stores. But here in the Philippines, we're still a very touch and feel consumers. They would still go to our malls. And when you're in the malls, they were still going to go to our retail stores and make sure that the items that they have they really see it, they could fit it.
And I guess also, like, for example, from the lessons that we learned, for example, from Nike, which thought they could do a 100% pivot to digital, they paid the price because they opened the door for on-cloud and Hoka to come in, right? Okay, yeah.
Yeah, Sir Erwin, the digital transformation is also happening not just in retail, but also in the banks, also in the malls. So how is SM, positioning?
Yeah, so maybe I can answer that in two ways. Okay, because so digital transformation in terms of making our operations more efficient, productivity, all the tools, application tools, and everything, that is happening. But that is to make our operations more efficient. Then there's the other side of it, like investing in platforms, investing in new ways to distribute or the touch points with our clients. That one is still evolving. I suppose the most, aside from retail, the other part of our company that is more advanced in that would be our banking, which necessitates it. But for us, I think the more important point is that even if it's, I would say, branch-based or digital-based, the key aspect is that how we approach it never changes. So it's about integrity, customer service, and essentially making the customer at the heart of things. So in that sense, if you're going to look at the branches, we have a massive, one of the many bank branches we have across the nation, and that is to help our clients have access to our branches in our service. But also we have digital apps for the ones who would prefer to have banking in that manner, then that is open for them also.
Okay, so I'll move on to the next line of questions now. So among your core investments, so banking, property, retail, so which one are you most excited about, I guess?
Okay,
for our
so
audience?
excited. Well, I would say we're excited with everything. Why? Because we're retail, property, and banking. We're one or two or top of it because of our scale. But if we're gonna think about it in the perspective of where we are spending the most, okay? So our CAPEX spending is most in our property group. So here, SM Prime is the largest integrated property developer in the Philippines. So they build communities, complete communities where people can work, live, and gather. So here, what we see really is that this is where we can create most value in CAPEX. I mentioned we're spending over 150 billion the next 5 years to have 12 new malls and also refurbish 16 malls. And then maybe if I can, is it okay if I can share maybe the next slide on why the lifestyle cities. So yeah, maybe I can just share how the high value that how our capital, if we deploy to integrated life cities, the value that it creates for us and also for our customers. So here you would see that we are developing across the country integrated lifestyle properties centering on the malls. So malls would be in a way, that is our first foray in trying to develop the retail base. So we have the malls, and as the economy, the local unit economy around those malls grow, we add residentials, offices, hotels, convention centers, or even arena, so that together it kind of creates complete communities. But I mentioned a while ago, obviously this gives a lot of value to SM, but aside from giving customer service, this also helps fuel rapid urbanization. So as it fuels rapid urbanization, who benefits? Jobs are created, it boosts local economies, and more importantly, it improves the everyday living of Filipinos because they are exposed now to better communities, better buildings. So it's exciting both in terms of, I guess, high value, but also how we can continue to deepen how we serve our customers.
Yeah. One major project of SM Prime also is the reclamation, right? So
Yeah,
could you give an update on that?
sure. Can I trouble you for... Okay, so yeah, I will give an update on that. Maybe just for context of size, no? So what you see in the screen is Mall of Asia complex. So this roughly around 60 hectares of development. In front of it, and you can see later when you go out, is the reclamation project. So it's envisioned to be around 360 hectares. So it will be our icon in terms of our development. So we are finished in terms of hopefully by end of the year at around 70% of critical sand filling. And then in that sense, because there are multiple steps, so the final step would really be a presidential decree saying that this 360 hectares is sovereign Philippine land, right? And then after that, you can title. But right now, we're really more on the sand filling. So critical sand filling will be finished around 76% as of now.
That's good. Any other, big projects that the SM Group is undertaking that you'd like to share?
Mostly really around this area. And then also, let's say, for example, for our residences, we are essentially introducing our signature series. It's our more prime, higher-end developments. So for us, when we look at it, this is just a natural progression how we serve our clients. So we are SMDC was very strong in middle market. It's really the biggest developer there. It has provided good homes. But as you see, as our country develops, as our clients also increase in their capacity, it's just we felt that it was time for us to enter that market also.
So for all these developments, so this is the reason why you mentioned that the biggest CAPEX spend is on the SM Prime,
Yes.
right? So how are you funding all of these CAPEX?
Okay, good question, because it's a lot of money, right? So one of the things that is quite important to understand for investors, hopefully we can share, is that I would say SM Prime is in a very good position, because what is inside SM Prime? SM Prime is really a cash-generating business. It's a retail business because of its malls. And then we have 88 malls, and as you can imagine, that generates a lot of cash. Okay, then as it generates a lot of cash, and it has grown in size, if you're gonna look at their DE ratio, their debt to equity ratio, it's really below 1. So what does that tell you? We use more equity than debt, even with our size. So in that sense, what it can allow us is that we can continue to grow in a sustainable and financially prudent manner. So what does that mean? If we continue to fund this project, integrated projects, 70 to 80% would be from internal funding, because inside SM Prime is also a strong retail proposition that generates cash. And then that allows us, in that sense, to grow, and then around 20% of above that will be debt funded. Why do we choose debt funding today? Precisely as I mentioned earlier, because our solvency ratios are really quite conservative, even with our size.
I just want to ask, because I think last year, SM Prime was planning a REIT, which was delayed, the REIT. Is that still, something that investors can expect, or has it been indefinitely postponed? I mean, of course, you need it for the fundraising.
Yeah. I think the REIT is a very good proposition, especially for a company our size. I think there's a couple of factors that we need to consider. One is essentially the market, right? The market. Can the market absorb potential REIT our size? So I guess those are the questions that we need to answer, because and then if you're gonna, because the SM Primes, you're going to look at it, it's predominantly retail. And if you're going to look at the REITs out there right now, it's really more commercial and offices, right? So that's the first question. Is it enough for to absorb? But we think this is a very good market. It's a very good tool for us. And then second, as you would know, there are positive changes in the law, in the regulations of it, especially around use of funds. Okay, so we await a future better changes in regulations. But at the center of it really is when we enter that market, because of our size, we need to consider how it can be a very, the time it the right time, because the equity markets right now, in a way, is not, it can be better. Then, sorry, just last point. Then in that sense, because our balance sheet is very healthy, then funding, and there's a lot of internal funding, then using debt is something that is positive for us.
Sir Jonathan, I want to ask for SM Retail because, okay, it's been almost 6 months since the global Trump tariffs, no? So the Liberation Day, right? So has it impacted in any way? Have you seen the impacts of all these global uncertainties and tariffs with your operations as SM Retail?
Not as significant, very immaterial as far as we've seen. Of course, there's much more competition coming from online because of the tariffs that have been put in the US. But these are more anecdotal rather than really actually seeing it impacting us. In terms of the cost, we really haven't seen a major shift in terms of availability of items or cost affecting us in terms of these tariffs.
But how are you, so far wala pa, but are you like bracing, or what's your outlook like in the next 6 to 12 months in terms of
I
this?
think it's more of continuing to look at our supply chain, ensuring that we're able to place orders in our overseas orders as early as possible to make sure that we're able to secure the supply. So that's how we're managing the uncertainty.
And then one more, no? Because at the start of the year, I think one of the points that we're hopeful of is that with the inflation already at that time, slowing down, that consumption would recover and rebound, no? But so far, at least for the first half, it seems like it's not that, material rate, the rebound, right? So
I think in the first half, the impact is quite good. We've seen our growth nearing almost close to, it's high single digits, but part of that is also driven by the change in school opening. Now, coming into the third quarter, we're still, there's still a few days left in the month of September. We do see the impact of the change in the school opening, but at the same time, weather is not really helping at all. A lot of these storms and flooding, it really doesn't encourage our consumers to go out and shop and go to the malls. But nevertheless, we remain hopeful. Now, of course, having relatively lower inflation sustained in the past few quarters gives us a positive outlook.
I guess as a follow-up to that, usually do you see or do you expect like a lag effect in terms of when the inflation slows down and when the consumption spending would pick back up? I guess my question is, are we expecting even more, acceleration in the coming quarters? Or is this close to already the normalized level of
I think it's more for normalization.
Okay.
No, I'm just curious naman about the share buyback program. So, a first in the history. I just like to ask what's the rationale behind this, and what metrics did SM use to decide to do the share buyback?
Yeah, thank you for that question. Yeah, so the first thought, so we had that approved by the board. But the first thought we had was that if you're gonna look at our share price today and our market cap compared to 5 years ago, it's the same, roughly, but our profits actually doubled within that period. So the first aspect is really that we feel that we are undervalued. And we really wanted also, in that sense, we listened to our investors, and then to essentially support our investors with this, we wanted a more substantial amount or substantial buyback given our size. So the $1 billion buyback is like the biggest for a Philippine company, because we felt that that is something that will be substantial to our investors. So that is one part, which is just a continuation of our core belief that we should take care of all of our stakeholders. And then the other aspect of that is that we believe in our growth, essentially. So we believe in our growth, that because of the opportunities in the Philippines and essentially how we are positioned, that we can actually grow and do the buyback together. Okay.
Because we know that SM is one of the, if a foreign fund, it's one of the biggest holdings, right, for SM, I guess, as a product of
30%,
of the size.
33%, yeah.
Like in your, what's their biggest concern when it comes to investing in the Philippines in general and maybe specific SM, right? What's their biggest concern now?
But yeah, you're true. That's correct. We have around 33% for investors, and we actively engage them. And we actively engage them because all our investors are important. When we engage our offshore foreign investors, they give us insights on what are really happening across other markets as well. Because when foreign investors look at us, they look at us in the perspective of what can Philippines offer. And then that is the first question: what can the Philippines offer? And then within that, us being the proxy of the Philippines, what is our play in that area? I think most of the comments and essentially the factors that they really tell us is really about Philippine macro, the catalysts that the Philippine macro would have compared to the catalysts that the other choices that they would have in other countries, and then especially in the U.S. when most of the fund flows really go back to the U.S. So that is one. What are the catalysts in the Philippine economy? And for a long time, most of our catalysts is really consumer-driven growth, which is a very good catalyst within the Philippines. And that is something that we need to explain more to our offshore investors, why that is very a high-value play for them as well. It's really the catalysts. What are the catalysts that we would have?
That's also the same discussion that we have in
Okay.
our team. We're always thinking about the catalyst, no, for the country in general, right?
Yeah, I think it's really the
Could the potentially lower interest rates be the catalyst that we were looking for? How could it impact SM?
Aside from what Jonathan said a while ago, in terms of how it's positive to consumption and hence we're consumption-driven economy, lower interest rates generally for the macro encourages expansion. And if you're going to look at how, you covered it in your research, I presume, right? But it's not only SM, the other conglomerates are expanding also. Your very good guest a while ago is just talking about all of their expansion plans. Then essentially one thinks about, with all of these expansion plans, and if you're going to look at the corporate earnings really growing year on year, why is the share price not going? So that one we all need to figure out. So please invest so that it goes up. But to answer your question, yes, generally for a consumption-driven economy, lower interest rates equates to more purchasing power. Lower interest rates equates to more expansion. But one thing I suppose that can be a catalyst, if you're going to ask me catalyst, of a lower interest rate is really how to improve household debt. Because our household debt is we're the lowest, actually. I got a 10, 12%, the lowest. So that sector with lower interest rates, hopefully, but it's not about lower interest rates, it's about having low interest rates for a long time. And then in that sense, maybe household debt can increase in a sustainable manner, then that could be a catalyst, because more debt in a sustainable manner, people spending it properly. It's like you're walking in a treadmill, walking in a treadmill. So in that sense, yeah, you will go faster and further, right? So it's something like that.
So that said, I guess given that you have shares in BDO and China Bank, like how do you actually identify credit-worthy consumers that you can lend to? As you said, that is one of the catalysts to maybe spurring more growth and consumer spending.
Oh, I'm sure they have. There are matrices, industry standard, I suppose, because lending to retail is really, it has to be responsible. So there are a lot of essentially credit parameters that they would have. And I think all of these are essentially, in a way, a market practice. But what sets apart BDO, I suppose, is really their distribution. It's that, like, with over 2,700 branches nationwide, the access that the branch network gives to across the country, that is their advantage. In terms of credit metrics, they have very strong credit metrics when they give retail loans, but only because we need to be responsible lenders. Yeah.
Okay, so maybe since we only have a couple of minutes left, no? So I guess my question is, you mentioned a while ago, SM being the proxy of the Philippine economy, consumption-driven, but also at the same time, there are concerns about the macro headwinds, diba, that the country is facing. So I guess my question is, why should we, retail investors, be investing despite all these, not just macro headwinds, but also some global uncertainty, diba? So why should we invest in SM and in the Philippines also in general?
Okay, I'll make it succinct because we only have 1.5 minutes. The ticker. Okay, very very quickly. So first of all, for the foreseeable future, I think we'll be continue to be a consumption-driven economy. And then, and if you're going to think about it, 60 million, I think 60 million will be formed as our consumption base. And because of our young demographics, new entrants to that consumer base increases every year. I think per government estimates range is 800,000 to 1 million. Then in that sense, in the next 10 years, you're going to have 10 million more consumers. So that is the macro behind it. Then the next thing is that, what is our company doing? So our company our footprint is in the middle of that consumption-driven economy. And then because we believe in the economy's growth, we have a nationwide geographic expansion. So essentially, we're expanding all our core businesses. And we do this to create new market opportunities across regions. What is our tool for this expansion? We have a diverse but synergistic portfolio. So all of our businesses, retail, property, banking, our portfolio companies, they all work together to essentially fuel each other's growth. We also have discipline in terms of deploying our capital. We look really for high-value projects. A lot of projects underway. You just walk outside, you can see Pasay Reclamation, and I was explaining a while ago, other integrated property developments. But the key aspect of that high-value project is that we are building businesses for long-term growth, okay? And as such, we are undervalued with high growth potential, okay?
Sir Erwin, Sir Jonathan, would you like to share any last words also on top of what Sir Erwin mentioned?
And I think we partner with our other SM subsidiaries in making sure that we continue to fuel that growth.
All right. Thank you very much.
Thank you for having us. Yeah, thank you.
Thank you. Thank you.
Thank you.
Thank you to our speakers from SM for giving us a closer view of their company's outlook. Once again, let's turn to our moderators for our key takeaways. So, Charles, what would you like to say in closing for SM?
Okay, actually, there's quite a lot, no. So, but first of all, of course, we understand there's a lot of macro headwinds, global uncertainties. But I think what's clear is that what SM highlighted is that the structural, the structural growth is still there, given the country's, consumption-driven economy, the demographics, the young population, right? And there's a lot of opportunities, but we just need to focus more on the longer term, the bigger picture, right? So I think that's what's evident in the discussion. And also at the same time, I think what's interesting or what's very good for me, is that SM is not just riding on this structural growth, but also in a way leading it or creating it or amplifying it, diba? So with all the, they mentioned like creating businesses, creating opportunities, with all their projects, developments, right? I think it would not only benefit, but also even accelerate that structural growth in the long term. And lastly, Sir Erwin mentioned, so even with the doubling of profits over the last 5 years, the share price hasn't really changed. No, so in a way, there's a current opportunity to be able to participate at a more attractive valuation.
All right, thank you for sharing your thoughts on SMIC, Charles.